Welcome to this episode of Real Estate Week in Review. Let's get right into it. I'm going to start you off with my predictions on what I think is going to happen in the real estate market this fall, as well as ending off the year in 2023. Basically, what I think is going to happen is everybody who got pre-approved in May, their pre-approvals are coming up in September here. So when you have, you can lock in for 4 months on a pre-approval, but come September here, they're going to have to get pre-approved if they haven't bought anything. And the rates have gone up rates went up in June, rates went up in July. They're going to have to get pre-approved at this new higher interest rate. So I think that that's going to push a lot of people away out of the market and pull some of that demand out of the market to slow things down. I think it's going to be a slow fall. I think that's going to play a big factor. I think we are seeing more supply hit the market. We are just experiencing this heavy interest rate, and I think a lot of people are taking a step back, slowing down with things, and actually moving towards renting, which I'll talk about in our final article. But that's my prediction for the fall. I think it's going to be slow. I think the winter is going to be slow as well, and we may not see any type of possible resurgence until 2024. So let's jump into this first article here. A sigh of relief after Bank of Canada holds its interest rates at 5%. This is a Yahoo Finance article. And with 2 rate hikes over the summer, the Bank of Canada decided to take a break on September 6th and not increase interest rates. This is great news. They paused it. They want to see what happens because I don't think the markets had time to actually catch up with the 2 interest rate increases in June and July. So I think they're actually seeing a little bit of a slowdown too. More supplies hitting the market, less demands coming to the market. So they did not increase. That is great news. It looks like they have had recent evidence to believe that excess demand in the economy is easing. However, this does not mean that they won't increase interest rates in the near future. They will be keeping a close eye on the real estate market along with any inflationary pressures this fall to decide if more increases are necessary, and they could be. This is the 10th time that the Bank of Canada has raised interest rates since 2022. However, there might be a light at the end of the tunnel. Some mortgage agents are predicting that rates will hold steady in the first half of 2024 and then potentially start to decrease well into 2025 in a couple years. Knock on wood. We'll see if those predictions come true. I think it'll be interesting. It very well could hold steady in 2024. It really depends on what the market does. Market's been nuts over the last 2 years and very unpredictable. So really hard to predict, I think, in the longer term like that. In the short term, at least right now, we're seeing what's happening. We can kind of predict a few months out what the market may or may not do. Still very tricky at that level. So that'll be interesting to see. Follow along every few months or so to see what is happening and what's new with interest rates. But at least for now, we can breathe a sigh of fresh air knowing that rates have not increased, and we'll hold off until their next meeting, I believe in October here. So we're going to see how that pans out. Let's jump into the next article. Persistent high rates could push indebted homeowners towards renting. This is an article by the Canadian Mortgage Professional magazine, and basically in this article, it breaks down how when interest rates increase, we tend to see an increase in rent prices and demand. And then 2 things occur. So 1, rates go up, which pushes potential buyers out of the market. So maybe they want to just wait until rates come down, or it literally pushes them out because they can't afford it anymore. Prices are just too high and the rates are too high as well. So it actually pushes the buyers out of the market and it forces them to, their only option is to rent. So it forces them to rent. And number 2, over-leveraged sellers may be forced to sell their properties as well. So due to increased payments or over-leverage, they may be forced to sell because they can't afford it or they just can't take on those carrying costs. And then that pushes them in entering the rental market, at least for a short term. So I think between those 2 things, we may see a lot of people entering the rental market, a flood of people entering that market. And the article goes on to saying that they predict if rates remain high, the pressure on the rental market will persist. In conclusion, their fear is that renters will end up playing musical chairs because there will be little supply for them to choose from. So then we're going to have this sort of demand come out from the resale and purchase market and go into this rental market and flood up the rental market. And it could very well see little supply in the rental market, an excess of demand, which then creates bidding wars and rent prices to increase. So it's just a never-ending battle of tug-of-war back and forth with resale, interest rates, rent market, rent prices. It's insane. So comment below. Let me know your thoughts on this whole rental issue as well, because I could very well see it myself see it happening and that demand flooding the rental market because people are getting pushed out of the resale market. So very fascinating to see, and we're going to keep a close eye on the rental market as well. But please leave your thoughts on that. Those are my 2 articles for the week. Really just wanted to hone in on the interest rates, holding steady where they're at, and my prediction on what is going to happen this fall and the end of the year come November, December. And it'll be interesting to see what happens in the new year. If rates do hold steady, that would be so nice. I think right now we can't keep going on this trajectory that we're on, because just over the past couple months, like July and even August, we saw bidding wars, home selling over asking, multiple offers, and it's crushing this market. The prices are still remaining high, so I think there's got to be some give here in the next 3 months or so, and I think we're going to see it coming into the fall here. So it'll be interesting to see, because the fall is typically an active market. History shows spring and fall are very active markets. More listings hit the market, more activity happens. Now we are actually seeing more listings hit the market in September here, but I don't know if as much activity is going on and as many buyers are purchasing these listings that hit the market. So going to be interesting to follow along with. And I'm going to go against history right here and say that the fall market will slow down when it typically should ramp up and increase in activity. I think it's going to slow down. Let's see what happens. I'm going to keep you updated week by week in our Real Estate Week in Review. Thank you so much for tuning in, guys. Don't forget to subscribe to the channel, comment below, like this video, and let me know your thoughts on what do you think is going to happen in the real estate market in the next 3 months. Thanks for tuning in, guys. We'll see you next time.